Shares on the Chinese mainland headed off to a strong start on the first trading day of this week after regulators announced that the long-awaited stock index futures are finally on the way. But the market shrugged off the positive news by falling short soon after the opening. And still, many believe the stock index futures are important for the market this year, and some are interested in participating. Our reporter Dai Qian talked with one investor about his plans.
Word of the stock index futures has gotten aggressive individual investors excited, including Chu Shiying. After more than tripling his initial investment to about 2 million yuan over the past 3 years, he's now aiming even higher.
I'm looking forward to the index futures as it uses the principle of leverage, so the gains can be much bigger than stock trading.
On Friday evening, the China Securities Regulatory Commission approved stock index futures and said they could be ready to go in just 3 months. Index futures, which are agreements to buy or sell an index at a preset value on an agreed date, are part of China's push to give investors more options in what is now the world's third largest stock market by value.
The idea is to enable investors to hedge their risks by cutting losses or even gaining in a falling market. It would also reduce market volatility in the long term. But for now, the index futures are still mostly for institutional investors, because the high cost is a barrier for individuals.
The contracts are based on China's CSI 300 index. Investors must put up 10% of a contract's value in order to buy, sell, or short the index futures as collateral. The value of the contracts will be the level of the CSI 300 multiplied by 300 yuan. So if it's at 3,500 mark, an investors would need to spend 105,000 yuan to buy a single contract. After the announcement, the Shanghai Composite shot up more than 3%, but ended the day up 0.5%, and the Shenzhen Component eased 0.8%. Analysts say the fluctuation is pretty much they'd expected.
We expect to see volatility during the 2 to 3 months after the announcement, and it could head either way. Usually, if the index has been suffering losses, it would go up following the news, and the other way if it has been climbing. But for the long term, the index future is just a risk hedge tool, so it won't change the market value, listed corporate earnings, and the economic status, which are fundamental elements of a stock market.
And while Chu Shiying is excited that index futures are coming, he says he won't swoop in right after the trading begins. He says there are still details to study, like trading rules and professional experience. As a stock trader, he knows that he can lose part of his investment. But in futures trading, it's possible to lose all of it. Dai Qian, ICS News.